Silver prices are once again in the spotlight as global geopolitical tensions reshape financial markets. From escalating conflicts in the Middle East to shifting monetary policies in the United States, silver is experiencing extreme volatility, creating both risk and opportunity for investors. Over the past year, silver has delivered extraordinary performance. Prices surged dramatically in 2025, gaining over 140%, and even reached record highs above $120 per ounce earlier in 2026 before pulling back sharply. This kind of price movement highlights one critical reality. Silver is no longer just a stable precious metal, it has become a highly reactive global asset. Trading economics +1. The primary driver behind silver's recent volatility is geopolitical uncertainty. Rising tensions involving Iran, Israel, and broader Middle Eastern conflicts have pushed investors toward safe haven assets. Like gold, silver benefits from fear-driven demand. When uncertainty increases, investors often move their capital into tangible assets to preserve value. The Times of India, however, silver behaves differently from gold. While gold is purely a safe haven asset, silver has a dual role. It is both a precious metal and an industrial commodity. This means geopolitical crises can push prices up, but economic slowdowns caused by those same crises can limit industrial demand, creating conflicting price pressures. For example, recent developments show silver rising alongside gold during conflict-driven market fear, but also experiencing sharp corrections due to profit-taking and strong US dollar movements. This push and pull dynamic is why silver is often more volatile than gold. Barron's +1. Another key factor influencing silver prices is monetary policy, especially decisions by the US Federal Reserve. Interest rates play a crucial role in determining silver's direction. When interest rates are high, non-yielding assets like silver become less attractive. On the other hand, if rate cuts are expected, silver tends to rise as investors seek alternative stores of value. FX Street. Currently, uncertainty around future rate cuts is adding to market instability. Strong economic data and persistent inflation have delayed aggressive rate reductions, which has placed downward pressure on precious metals at times, even during geopolitical crises. Supply and demand dynamics are also shaping the silver market. The global silver market is expected to remain in a structural deficit for several consecutive years, meaning demand continues to outpace supply. Industrial demand, especially from solar panels, electric vehicles, and advanced electronics, is steadily increasing, providing long-term support for prices. CC Direct. At the same time, geopolitical disruptions can tighten physical supply chains. Conflicts, trade restrictions, and transportation issues can limit the availability of silver, pushing prices higher. This combination of limited supply and rising demand creates a strong bullish foundation, even when short-term volatility remains high. Deriv. Looking ahead, analysts have mixed forecasts for silver prices. Some institutions expect average prices around $80 per ounce in 2026, while others suggest the potential for $100 or higher if geopolitical tensions escalate further. In more extreme scenarios involving prolonged conflict or severe economic instability, bullish projections even extend far beyond current levels. J.P. Morgan Chase +1. Despite this optimism, investors must remain cautious. Silver has recently experienced sharp corrections, including drops of over 50% from peak levels in a short period. These sudden moves show how quickly sentiment can change in today's fast-moving markets. The Economic Times. So what does all this mean for investors? First, silver remains a powerful hedge against geopolitical risk and inflation. Second, its industrial demand gives it long-term growth potential beyond traditional safe haven assets. But third, and most importantly, it is highly volatile, making risk management essential. In conclusion, silver is at the center of a perfect storm: geopolitical conflict, economic uncertainty, shifting interest rates, and supply shortages. This unique combination is likely to keep prices volatile in the near term while maintaining a strong long-term outlook. For investors, the key is not just to follow the headlines, but to understand the deeper forces driving the silver market. Because in today's world, silver is no longer just a metal, it's a reflection of global uncertainty itself.